Welcome to Brainfood Bytes, another update on the ever-changing world of tariffs. My name is James Robinson, a principal with Armanino, and the firm's head of customs, as well as Global Indirect Tax and Trade. Over the last 2 months, one of the most significant trade-related refund events in US history has quickly moved from theory into execution. What began as a customs and trade law issue now sits squarely with accountants, controllers, CFOs, and CPAs. Today, we're going to go over 5 key areas at this stage of the refund process. What has happened with IEEPA refunds since they started, how the refund system works in practice, the steps importers must take to secure refunds, what tariffs replaced IEEPA, and lastly, the accounting and financial reporting considerations created by these refunds. So what's been happening? The invalidated tariffs collected between April of 2025 and February of 2026 covered approximately $166 billion with more than 53 million import entries. Refunds did not begin immediately. Instead, US Customs and Border Protection, following direction from the Court of International Trade, launched a new refund mechanism on April 20th, 2026. Refunds are not automatic. Importers must take affirmative steps to file through CBP system. I'm pleased to report that so far things have been going well in the most part. CAPE, the refund mechanism, has been accepting refund claims, and customs brokers are reporting that many businesses are able to do this themselves. Businesses getting access to ACE and CAPE has been an area of issue, but we are seeing that challenge being worked out. How the CAPE system works. CAPE, which stands for Consolidated Administration and Processing of Entries, is a new function within CBP's ACE environment. Refund requests are submitted in bulk using CSV files. Based on what we are hearing from businesses and customs brokers, Phase 1 of CAPE would seem to cover approximately 40% of IEEPA entries. It excludes entries that are flagged for reconciliation, subject to drawback, or open protests. It does seem that CAPE is flagging these entries when they are being uploaded, but doesn't reject the entire batch. CBP estimates that refunds will be issued within 60 to 90 days after acceptance and where no further compliance checks are required. Now, we in the professional business have a pool running, and I put my money on the 14th of June as being the first day a confirmed refund is reported. You may want to Google whose birthday that is. The third part, steps importers must take to secure refunds. There are 5 key components. First of all, confirm they are the importer of record and review the underlying import documentation for accuracy prior to actual submission. Must access and maintain an ACE portal account, and this has been one of the main issues that businesses are facing. Must ensure that banking information is correctly entered to receive refunds via ACH payments. Must identify eligible entry numbers. And lastly, submit accurate CAPE declarations and ensure acceptance by CBP. CBP will be undertaking further compliance checks on submissions, so it's important that these are carefully checked to identify any underlying issues within valuation, origin, or HTS codes. IEEPA refund claims that are subject to further checks may be delayed significantly. This may also impact Phase 2 claims and subject the importer to costly and time-consuming CBP audits. Some tariffs have replaced IEEPA, and although they were invalidated, tariffs did not disappear. On February 24th of this year, the administration imposed an effective replacement tariff under Section 122. This charged a flat 10% surcharge on most imports, applies globally with some narrow exceptions, and it is limited though to 150 days, unless extended by Congress. Now, is that going to happen before the midterms? I'm in the probably not category. Section 232 and Section 301 tariffs remain in place as before. The 5th section, some accounting and financial reporting issues. Now, the Supreme Court ruling alone did not necessarily create a receivable due to the uncertainty around eligibility and process. For many companies and businesses, recognition may occur once eligible refunds are identified and a CAPE declaration is filed and accepted. There's going to be impact to inventory and margin. Tariffs may have been included in current inventory costs, COGS, CapEx calculations, and similar categories. This downstream impact of refunds should be looked at across all federal, state, and local tax reporting. One of the other areas is contractual obligations with customers. Refunds only go to the importer of record, even if these tariffs were passed on to customers downstream, or they may have been absorbed elsewhere in the supply chain. You should review contracts to determine whether refunds create obligations to refund customers or counterparties. And I'll say from experience, the question of, I paid tariffs, how do I get them back from my vendor, has outweighed the number of people asking, how do I get a refund? So let's bring this all together. The IEEPA refund process is unprecedented in scale and complexity. CAPE has created a viable refund path, but only for companies and businesses that act. For CPAs, this represents an advisory, risk, and opportunity. We have to manage recognition of these refunds, look at disclosure, compliance, cash recovery. As more updates occur from CBP and the CAPE system, CPA should monitor what's coming back in terms of feedback when phase 2 will open, and make sure that we're finding opportunities and tracking refunds carefully. For many businesses, the difference between acting and not acting will likely be in the millions of dollars.